So we'll go over the settings really quick. So this is where you put the orb time. So you can adjust it to 5 minute, 15 minute, 30 minute, hour. This is your orb start time and end time. This is important because it is anchored to Chicago time. When I started the coding, I live in Central Time, so I just anchored it to that time, and it's just easier to just I just left it alone. So no matter what time zone you are on, as long as it's set to 8:30, it will be the right time. So even if you switch to say you have your clock set to, let's say, New York time, so it'll be almost noon. Long as it's set to 8:30, it will show 9:30. So no matter what time zone you're on, as long as it says 8:30, you're fine. If you want to do London session, the London session starts at 2 a.m. As long as it's set to 2, no matter what time zone you're in, it will be correct. It is anchored to that time zone. So no matter what you do, it will just stay locked. And then the orb end time, let me show you that real quick. I have it set to 4 o'clock. You can set it to whatever time you want. So if you're like I said, you're trading London session, you can set it to 10 a.m. I have it set to 4. So that's pretty straightforward. However you want to set that up, you can pretty much leave it alone. If you're just trading the 15-minute orb, it's fine like how it is. If you want to trade the 5-minute orb, you can make it smaller or maybe a shorter time frame. This just shows you the historical line, so it goes for the old orb. So if you don't want your chart to be cluttered, it won't show the past ones. So I'll show you. So they'll just show all the old information. This is just for the midline. So if you don't want the midline, it'll just make it go away. Okay, so this is the entry models. So this is the standard breakout. This is looking for. So today we didn't get a valid breakout, so I won't use that one since we weren't above VWAP. So a valid breakout needs to be above VWAP to be considered. So I'll show you over here. So if we go to the settings, we have 3 breakout types. So you have the standard breakout, which is a close outside it's a 5-minute close outside the orb. Then you have continuation, which is it needs 2 continuous candles to be in the same direction. So like we have a breakout candle here, and then we have a continuation. And that would be a valid setup for it. And break and retest. So this is just the standard break and retest. There was no retest on this day. Price didn't come back, it just shot straight down. So that is the third type. This one doesn't get a lot of entries. That's why I don't use it that much, but I put it in there just in case somebody wants to use it. And then you have the retest distance. So what this does is it looks for retest a certain amount of points away from the orb itself. So price needs to come within, I have a default to 10 points for it to be a valid retest. So if price came down and came back in retest and it came within 10 points, it would say, okay, this was a valid retest. For me, I use the standard breakout. That's the one I really like. It gets a lot of you get a lot of trades and a lot of valid trades. So these are just visual stuff. They just can make the orb lines different colors. So this next part, TP1 visual box 1 and 2, and TP hit detection. These are actually very important, especially if you are trading other things besides MNQ or NQ. So what this does, let me show you on a valid setup here. You can also change this. I'll show you how to change it. So if you want to detect a different way, you can do that. So what this does is so the TP1 visual boxes are 20 points. And so you can change them. So you can make them thinner, you can make them wider, you can pretty much do whatever you want. So if you're trading something like gold or like ES, 20 points is a lot. So if you were to go to ES, it would look gigantic. For NQ, I found 20 points. It's a good range for the box. The hit detection, or I would say the win detection, is the bottom of the box. So whatever is closest to entry. So if you have to sell, it would be like the top line. I'll show you what that looks like here in a second. So when price crosses this threshold, this bottom line, the P&L system counts as a win, and that is where it's measuring it from. So the entry, stop loss, and TP. So this is where it's getting this number from. So it's saying from this entrance to this line, to this bottom line, that is 1.3 R. So how it works is it goes off the middle of the line. This is where the original hit detection was. That is why it is 10 points. So if the TP box is 20 points in total, 10 points is half. So that would put the line here. So if we were to adjust this to 5, keep the boxes the same, it would now change the where it would detect the entry, or sorry, the exit. So just be aware. So it matches this line. It's always half. So if you change it to 1, the hit detection would actually be a lot higher. It'd be like inside the middle of the box. So whatever this is, if you want it to line up with this bottom line, if it's 20 points, just do 10. If you're doing a 10 point, just do 5, and so on. See how you can see the numbers change here on the side for TP1? So if I put it back to 1, the hit detection is going to change. The boxes itself, these are just visual, but where it's saying the new level is going to be raised up. So if you were to go like beyond 10 for this one, it would just move the hit detection way outside the box. So that's something good to know if you're trading something other than MNQ, or if you want to adjust the boxes and keep it to that bottom line, you can do that. Or if you want to have it closer to the middle of the box, you just put it to like 1, and it won't be the bottom line. It'll be more towards the middle. So if you want to use the middle of the box instead of just the edge, you can go ahead and do that. That is one of the updates I did. It just made it a lot easier to do it like that. So this is just for the background, and this is for the dashboard itself. You can disable it, enable it, changes the size. These settings are for the key levels, if you want them on the chart or not. This is if you want for the dashboard, you have the key levels on there if you want to know exactly what the numbers are. The win rate info. So let me just turn this off so I have some extra room. Make it smaller. So if we turn these on, I only really focus on TP1 since that is the one that it's hit the most. Since TP2 is pretty much just like an afterthought, where price could run. So if we enable all these, so if we enable like these ones, we will get this. This will show over depending on your subscription. You can do 30 days. I think 60 days is doable with just a normal subscription of TradingView. I think if you have like a higher one, it can go up to 90. Like for me, since I have premium, I can go up to 90 days. And what this will do is it has a built-in P&L system, so it will track every valid trade, every A plus through C. It will track every single one, and it'll give you a breakdown over the past 90 days. So if you go back in time, if you were to go to instant replay to any point, it'll go from that point back 90 days or 30 days or 60 days, or whatever days you can go back, and it can look back at that time frame just automatically. So if you were to jump back until like January 2023, it will look back from 2020 from that date backwards, and it will give you the breakdown of how many trades you won, lost, what you risked, just a whole breakdown, so you don't actually have to manually backtest it. You can actually just look at this at a glance. It's always good to backtest to make sure everything's correct, but this P&L system is very, very accurate. So the win rate cutoff time, this is just for the P&L system. It will it's set to 1 o'clock in the afternoon, 1300. That's my time. It's just for the P&L system. So basically, if a trade is opened, or if there's a valid trade that pops up after that time, it just ignores it. It just says, nope, we're not taking that trade. This is just more for data collection for the P&L system. So this is how many trades it tracks per session. It's set to 0, so it tracks every trade. So if you were to set it to 1, it would only track the first trade, and if there was a valid, say you won the first trade or lost, it would not track any more trades. You have it set to 2, so that basically would be if you had a, say you lost and then there was another ballot set up in that same session before the cutoff time, it would track the 2 if it was set to 3, and so on. If you have it set to 0, it tracks all. The next thing is the realistic trade tracking. This is very important. What this does is 2 trades cannot be open at the same time. So this way you cannot inflate numbers. So that's what makes this P&L system and the backtesting built into it very accurate. I will show you. I don't know if it will really, depending on the like how the sessions have been, but let's see if it changes it, because it should make it go up. Yeah, it made it go up, you know, a little bit. So we had 59 wins with it off and 23 losses. So we have to turn it on. We had 34 wins and 13 losses. So what this does is, if there is, so like right here. So just say we took these trades and this one was entered and it did record it. It doesn't record D's, but it's just for the example. Say it was like a B setup and we entered this trade here. We didn't get taken out. And then it was another B setup. It would, with the realistic tracking toggled on, it cannot track a second trade until the first trade either hits TP or stop loss. It cannot enter a second trade. So this is what keeps it from inflating the numbers. So it just grounds it to, you know, say there was like 5 valid trades back to back. Like right here, this is a perfect example. We'd entered this trade. It did not take us out. Then we had another valid setup, but the indicator was only tracking the first one because it did not hit TP or did not hit stop loss. So that way that the indicator is tracking very, very accurately, basically how a trader would trade. A trader doesn't enter again if there's another setup. I mean, they can go heavier into the position, but they don't enter again. So that just keeps it very honest and very accurate. Okay, then these are just the higher time frame EMAs. I backtested this indicator back and forth for the 5-year with the 5-year data. This is the best combination I have found to work. You can always adjust them if you want more reaction. You know, if you want to get in earlier, if you think it's not, you know, reacting fast enough, you can adjust it. But this is the most stable over the 5 years that I have found. So yeah, you can change this all the way down to, you know, ticks or whatever you want to change it to. But I have found the 2-hour with a 20 and a 100 EMA have worked the best. Okay, so the orb average look back days. So what this does is, because in the old system we had a range. Basically said if the orb is within this many points and this points, it's valid. If it's not within that, it gets like penalized in the grading system. So what I did was I went back in and it looks at up to, I think, 10 days of orbs. I think that's the max I set it to. So what it will do is it will look at all the past orbs for 10 days or 5 days or 7, whatever you want to set it to, and it will average it out, and then it has a threshold from there. So if we go to turn this off, I can show you what it looks like. Okay, so I have it set to 5 days. Like I said, the back testing shows that the 5 days is the best. So the past 5 days of orbs average out to 178 points. So what that does is now it's a 10% threshold. So for it to be within range, it needs to be within 10% of 178. So then we have the extreme orb. What this is it can't be, if it's 1.5 times bigger or smaller, it's too volatile. So that's what it's looking at. And these numbers are just not random. They're actually, I tried every combination with the backtesting. I will show you the backtesting data for the 5 years. this is the best combination I have found that works. That gives you the most stable over that period of time. You could definitely optimize this to be like crushing certain markets, but then it will fail in other markets. That's what I try to balance this the best I could. So you don't really have to mess with these settings unless you're trying to dial it in, like for like something else. And then I'll show you what the backtesting indicator looks like, so you can mess with it. So if you wanted to test something else out, you can go ahead and do that. I'll show you guys how to do that. But these are the numbers like that I've found to work the best. But that just simply, and if you look here, it'll basically kind of give you a summary of like what it does in this one as well. So yeah, I have it set to 1.5, so it can't be 1 point times bigger than the orb size that it is currently for the 5 days. This is low volume. You can use it. I found that it's helpful, but it just basically lowers down the volume profile in the indicator. It's good. It works. I wouldn't necessarily say you need it with London. You can, like I said, it's something you can backtest and see if it's working for certain markets. It's just something that lowers down the volume profile inside the indicator. Otherwise, I just leave it alone. This is something we've kept from, I think, one of my first indicators is the minimum orb track, 2-track. Basically what this does, it kind of filters out like holidays and stuff. If there's an orb that is under 45 points, the system just ignores it. If it's too small. Like if you're trading like gold or like ES or London, you can lower that way down to like, I don't know, like 5 points. I think that's what we're testing with. Because you want to make sure you're getting those valid trades or valid setups. But with what I found in backtesting is that M&Q 45 points is pretty much going to be like a holiday or something, or just there's no volume, so it's really not even worth like messing with it. Okay, so breakout close override. That is just basically how many points a candle needs to be outside the orb to be valid. I have it set to 0. It just basically, so it's not, if it's like barely over, like not even a point, it will just ignore it. If you want to set it to 5 points, if you want to be like, it has to be over 5 points, over 3 points, you can set that to whatever number. So this one I have on, but I do turn it off from time to time. So what this does is if a breakout candle is over 55 points, it will ignore it. I do have it on for the most part, but there is sometimes where I see a trade and it's kind of in between. It's like maybe going from like 60 to 50 and it's kind of in between, but I do like the setup. I just will go in the settings and just toggle it off. But most of the time it helps me kind of, if it's like if it's like a 100-point breakout candle or like a 90-point breakout candle, that's why I have it on. But if it's like really close and I like the setup, I will disable it. So what this will do, the use percentage floor for max breakout, basically it just use a percentage of what the orb is, what the orb size is. It will say if it's a 100-point orb and you have it set to 50%, basically it can't be over 50%. So it can't be like 50 points. So if you want to do a percentage based, instead of a hard number, you can set it to that. I added it in there. I tried it out. Wasn't a huge fan of it. But I left it in there just, it is something cool to have, but I really don't use it. These are just the TP settings. 200 points is basically the farthest it will look for a valid TP zone. These are really good for M&Q. I've tried to adjust it for others, like assets, but I think these have been the best. The TP1, TP2 offset is just it offsets it a little bit closer to entry by like 20. It doesn't actually move by 20 points, but it just moves it closer just a little bit. So those aren't really anything to mess with. You can set it to 0, but it just moves it just a slightly bit closer. These are just, it'll scan for fair value gaps, and this is how big a fair value gap it needs to be valid. It'll just look at the swing high and swing lows. I go for 25. It looks like 25 candles in the past, and say it'll just see where structure is. This just shows the watch level on your dashboard. This is just a extra level of support and resistance on higher time frames. It helps. It basically just filters. It makes it really picky when it looks at what it's looking at for the TP zones. And for the stop loss, this is just a buffer. So wherever your stop loss is set, it will just set it 1 point below that. So if you want to feel like if a stop loss is there. So if you have the offset set to say like 20, it'll push it 20 points back. So setting it to 1 just basically puts it where it should be. So if you set it to 20, might have hit the max here, so that's why it's not pushing it. Let's see. Hold on. I think it hit the max, that's why it's not pushing it back. I think it needs to be a smaller stop for it to push. Okay, so the minimum SL points is 50. So basically a stop loss cannot be smaller than 50 points. That's what I just found that works best with NQ. And a max of 150 points. In my backtesting, there has only been 3, I think it was 3 trades in 5 years that ever got close to 150, or was about that. It just gives it enough room for how the stop loss system works to give it room to breathe. It has a hybrid system, so it picks stop losses based on ATR and structure. So it looks at both of them and it will look for the best one. Of the two, I found 150 points just gives it that room to be able to put it wherever it wants without me limiting it. But I've gone in and, like I said, it was like I think 3 stop losses that were even close to a 150 point like stop loss, but the orb was about 300 something points. So it was valid for that orb size. It just wasn't randomly just a big stop loss. And then the fair value gaps. The fair value gap. This just shows what's on. Like it just shows fair value gaps on the chart. And then once they get tapped, if you have it enabled to remove filled, they just go away. So those will show you all the fair value gaps that are valid in the chart. That was something I added recently. That was on my old indicator. And then this is just the your risk management. So what it does is you put in the point per, like the dollar per point. So I'm using M&Q, so it's $2 per point. And then I risk $200. So what the system does, it will risk about $200. It will risk more. It won't get out of hand, just depending on the stop loss. So if it's like an A setup, it will go kind of full risk. B setup, it will go less risk. So if you're having, like, for example, so you have, like, I have a 50K account. I don't like to risk too much. But if you're like on the higher side, say you were like had a bigger account or you want to risk more, you put in 500 or like a higher amount. So, okay, so now it says, okay, you want to risk 2 contracts and, you're risking 410. So it basically puts in your amount, your risk amount, and then it'll figure out, okay, depending on the setup, depending on the stop loss size, it will say, okay, you should use 1 contract or 2 contracts. So if the stop loss was maybe a little bit tighter, like down here, and the system says, okay, you can use 2 for this one. But if it's like a B setup, it'll just be more likely to tell you to use 1, or depending on your risk profile. So those are just like the basic settings. We'll go over the stuff on the chart, and then we'll go over like the updated stuff on the dashboard. Some of the, I guess you can say, the improvements that I've made. So if we look at the like this current setup here, we have A setup. So for a valid trade, for what we have here, it needs to be below VWAP. So if the breakout, so here it wouldn't matter, but if the VWAP was, let's say down here, and it was a breakout here, it would not count it. It would just ignore it. One of the core fundamental rules is it needs to be aligned with view up. I've had that since like the beginning. It's just something that I've always used. So if we look at this setup here, we have an A setup here. So if we look at the market context, it tells you the range that the current day orb is, and then the 5-day will either be red, yellow, or green. Green means it is in the range. It is in the proper 10% range. If it's yellow, it's a little bit off. If it's red, it's not in range. It's way off. And then we have the higher time frame trend. So it is saying we're in a bear trend. This is a 7-layer progressive EMA system. So it can detect trend, like reversals. It'll say like shift. I'll show you what that looks like. It'll say transitioning. That means the EMAs are starting to transition. So it's not a weakened trend. It's actually transitioning to it's going to transition to a bull trend from if it was bearish. So it can detect different states. And then we have the volume. So it has low, medium, and high depending on where it is. And then it'll have the times of how strong the volume is. So it's not just saying medium, low, or high. And then you have the contracts, the grade, the SL, and then you get the points, the risk, watch level, whatever that is, and it'll tell you, okay, it's previous day low. And you have TP1, TP2. So the thing that I added was, instead of just saying, okay, it's just gonna give you a grade, it's gonna tell you take it or not, what I added was a layer of why. So for this trade, so if we look actually at the breakout itself, we can actually look at the volume and see what the volume profile was. Okay, so it was medium. It wasn't that great, but everything was in line. But the volume. So it will tell you, it's a good trade, but volume's weak. So it can kind of, if you don't, they're like, okay, you know what, I like the trade, but volume's weak, so you're aware of that. So if we look at something like a D setup here, which can work. Just because it's a D doesn't mean it can't work, but they're just possibly less likely to run. So if we look at this one, there is a lot of, I would say there's a lot of issues. It was a news day, so I am aware of that, but I'll show you for example. So if we look at we had a huge orb, so it was not in range at all. It was way off. We are on a weak bear trend, so we're almost to transitioning, but we're still on a weak trend. But we did have high volume, so that's kind of one of the things to know. It's okay, well, I like this trade because it has high volume, but now at the bottom, if you look, okay, so we have the orb size is off, and we're going against the trend. So now you know exactly why it got a D, not just it says D. So if we play it out, obviously it was kind of choppy, but it did go to TP1. And then see the F grade, you can see the orb size is way off, the trend, and it had had medium volume. It still worked, but yeah, it did have these things working against it. So now it doesn't say it doesn't say don't take the trade or says skip. It just says caution and the reasons why. And so now we are starting to shift from it's a weak bear trend. Now we're trying to shift. So now it's possibly going to go into transitioning, or it's going to go into a bull trend. So yeah, as you can see here, I think that's when it finally transitioned. So it's weak, shift, and then now we're transitioning to bull. So it's not bull yet, but it's saying, okay, we're possibly moving to a bull trend. Let's see if we actually get there. I think we should chop. Okay. But yeah, so this is saying that we are possibly moving to a bull trend where we're not in a bear trend anymore. So we're actually moving up. So it can tell you different states of what that is. So if we go show you another example of a D setup, so you can see those are going to have more of the warning levels. But yeah, so we have this, so we're almost in range. We're in a strong bull trend, but we have good volume. So if you're like, and it's on the cusp of being, so for a C setup is 60 points. So it is on the very cusp of being a C. So sometimes these are the ones I look at more. So we can look at it and say, okay, we're counter trend trading, and the orb size is, it's not in line. And what the other thing that this does, it will pick what is the highest issue first. So out of these two, this is more of a problem than this one. So this is not so bad. This is issue number one. That is the strongest issue. This is issue number two. It's not as bad as an issue. See, that's how you can look at them. They go in order of strength. So if we were to look, so you get all these different, D's and everything, but it'll give you all the reasons why. So we have volume issue, we have the orb issue. These are going to stay the same because these are it's the same orb, but then you're going to see if he has another issue. So I'll show you. Let me show you that A setup. I can show you when the system says it's like everything's good, it has like all factors are solid. So let me show you what that looks like really quick. Okay, so I think it was this one. Yeah, so if the system says everything's good, it does have I see that it is over 100 and 103 out of 100. The max points it can actually get is 110. It's built like that just because there are certain factors that just the weight of the grading. That just was the easiest way to do it, to make sure it was stable enough. So basically, so it wouldn't filter out good trades just because of certain reasons. This way, you just had more of a balanced system. But when it has, when everything checks out, so we're in range for the 5-day. 5-day average is good. We're in the right trend. We had good volume, volatility. Volatility is in there, but it's in the background. So we had no issues. That's why it's going to give it the A+, and it says it's not going to have. It's going to tell you we're all good. So that just it just kind of gives you that extra layer of confidence. Let me see, what time was this at? So I think, let's see, this is a good example of the cutoff time. Let's see, what is this? Oh, so it will show every trade no matter what. It didn't track here, but yeah, so no matter what, it will still show you every single trade. I'll show you one more. Here's a C setup. Okay, so yeah, here's a C setup. It's almost in line for the 5-day average. It's recommending one contract, and then it gives you all your information, and then it's say, okay, you're counter trend trading in a weak bear trend, and the orb size is not ideal, but it still could work. So it's just going to give you those issues at the bottom. So for instance, the trade that it said yesterday, it was a D. It still says it's a D, but you can get more context and actually make a decision, not just based on the indicator, but what it's telling you. So if we look, okay, so we're shifting trend. The trend is getting weak. We could be possibly transitioning. We did have really good volume. When we look down here, okay, so we're counter trend trading in the orb. It's only 8 points away from being a C, so it's it could be taken. If you wanted to take this, it still gives you the your SL and your TPs. So that's something to be aware of. So if you're using it and you do see okay, I think the trend's going to change. It has high volume. I do want to take this trade, but now you know exactly why I got the D. It's oh, okay, it's a counter trend trade, and the orb size is not ideal. It was a lot smaller than the 5-day average because I think we were compressing. But if you wanted to take this, everything's there, but why now. It just says caution. Yeah. Let's see. Trying to see if I can find anything else. Yeah, like I said, I did add the fair value gaps in here. So I can actually see, I can show you. But yeah, it's, it's the same thing. The only thing that was the only issue with this trade was just the orb size. It just wasn't aligned with the 5-day average, which isn't a, it's not a, it shouldn't kill a trade. Just because of the orb size, it's just something to be aware of. So, we had good volume, we were with the trend, just this is the only thing that didn't align, and probably I would say like, volatility, but that runs in the background. It doesn't really affect anything. I mean, it has a very small impact. But yeah, so then if we look, I was going to show you how the fair value gap looks. So I have mine enabled to get rid of them. There you go. And then I think the next candle taps it. And then once it closes, it goes away. So I have mine set like that. So these two are still showing. And then I think it does tap it. Yep, and it disappears. So that goes away. And then, yeah. So that's pretty much for the updates. Trying to see. Those are all the recent updates that I did for the indicator. I think the only thing I did forget to mention was I did add this. So if you wanted a little bit of a cleaner look. So I'll show you real quick. Okay, so yeah, if you didn't want these, if you didn't want this on your chart, I added a little toggle so you can take that off. Just makes it a little bit cleaner. And if you just wanted to use the TP system, so the TP system and the stop loss system are basically independent from each other, and they can just be used on their own. So if you didn't want to use the grading system, if you didn't want, all you wanted was like the market context, or if you didn't want that at all, you can go ahead and you can turn all this off. So you just wanted just the TP system, you could do that. So if you just wanted that, the only thing it won't show if it's not aligned with VWAP, it just won't show anything. But otherwise, you can get this on your chart if you just want it like that. Or if you just wanted just like the market context to see what's going on, you can do that as well. So you just wanted the lines and just, the levels. You can go ahead and do that. Or if you did want the market context without the grading, you can go ahead and do that. You can pretty much use it however you want. So the TP system and the SL system, like I said, the stop loss system is a hybrid, and it picks basically, it looks at structure and it looks at ATR for like, for the range that we're in, and it'll pick the best one out of the two that it thinks is both the safest and within for a good TP as well. And then the TP system, how that works, it scans all, basically it scans all the price data. It looks at fair value gaps, it looks at structure, it looks at liquidity, and it looks at, and then it looks at key levels. And what it'll do is it will look for for TP1, it will look for a target that price will most likely go to. And then for TP2, it picks the most strongest level. So usually you'll see TP1 be like a previous day low or some type of key level. You'll see that more likely get that will be. And then TP1, it could be like a round number, like a psychological number. It could be a fair value gap. It could be a key level. It just wherever thinks price is most likely to hit. The old TP system from like a while back was using strong levels, like basically the strongest levels that it could find, but it wasn't always going to that. That was kind of like the issue. Oh, and also, sorry, it also looks for support and resistance levels. That was the other thing it does. So, okay, so for TP1, it is looking at the chart time frame, support and resistance, and it got hit twice. So that's why it's picking that area. So the other thing to note is for like TPs, these are zones. So like if they are support and resistance zones, price could go there and have a reaction, or just go right through it. So that's something like to also be aware of. Like since these are like zones that either price could go through it, have a reaction, stall there. So that's why I like to depending on what the the like TP1 is, I'll sometimes, you know, monitor it, see how what price does once it gets there. So like, actually show you the first one so you can show it correctly. Okay. So for here, say we entered on this first one, you know, try to get to 1-to-1. So yeah, we just went straight through it. We went basically straight to both of them, came back to TP1. So that was that support and resistance level, and kind of just bounced between the both of them. So yeah, so you'll sometimes see this where like it could bounce here and then go through, or it'll go through and bounce back, because this is a support and resistance level. So that's why it's having that reaction in right here. So it broke through, came back, retested it, and came back down. So that's something to be aware of, just, you know, what these mean. So if we look, I can find a better one real quick. There we go. Okay, so TP1 is a round number. That was like in this area, this is what it could find. So when there isn't a lot of close price data, since like everything's kind of far away, like this is, you know, right here is like the highest level, and it shows the round number as like where it thought it could go. So if we look here, it says R2 orb. That is just the orb twice. So it found this, since it couldn't find a good level past TP1, it has a fallback. So it will just say, okay, TP2 is probably going to be, or TP2 is going to be the orb twice. So let's see, 116 points. So yeah, so it's basically just going to it's just going to double the orb. Basically 2 deviations of the orb. So if you ever see 2R, it couldn't find anything to the left that it could use. It was just too far back. So it's just going to pick 2R after the orb. So just the orb twice. So yeah, so it will use, like, you'll see like here for value gap, you'll see round number, you'll see support and resistance. And you'll see like if it's a key level, previous day high, previous week low, it'll have that there. So you know exactly what that is. And then the watch level is basically, it's like third place. It's like when it scans for all these levels, the watch level, it's like, okay, TP1's here, but in between TP1 or after TP1 or at TP1, it's saying there's another level that you should probably be aware of, that it could be an issue. So it'll plot it on there for you. So for this example, it said, okay, the first level I see is previous day high. That could be an issue between your entry and your TP. So just something to be aware of. Sometimes it'll be like the same thing as your TP or right at your TP. It's just how the system works. This example here, this one was over 50 points. That's why this one was invalid. This one was about 75. Let me give you, there we go. It's a good example. Okay, so if we look here, let's see, do we get a warning? Okay, yeah. So chart time frame, support resistance, that's what this zone was. And then previous day low was the TP2. And then we have our watch level at previous day low. So it just said, okay, yeah, I don't really see any levels that are going to be an issue, but for this morning, it just went ahead and went with the previous day low because it was one of the strongest ones. Let me show you one more example of this. Same thing here. Yeah, previous day low was there, and then there was a fair value gap that was right in the same area. So like I said, TP1 will be the most likely where price will hit. TP2 will be the second or the strongest level, and then the morning level is just what else it's seeing. It's basically like a third choice or third option of like, okay, we might have some trouble here. But yeah, I mean, I think that's pretty much it for like the updates and stuff and how you can use it. Same thing here. So we get the, it thinks that the previous day high is it's a good level, or it's a strong level that the price could have some issues at. And then TP1 is a round number, and TP2 is a chart time frame support resistance. That's what the CTF means. And then yeah, if we look at the week, it says it's a counter trend, and the orb is a little off. But yeah, that's how you can use it, and that's how you can kind of look at everything. You guys have any questions or anything? Let me load up, and I'll load up the backtesting so I can show you that real quick. Okay, I'll show you. Okay, so I'll show you the backtesting, for it. So when you go to your indicators, you get the backtest. Everything should be default. If you want to just double check that everything matches these settings from the indicator, everything should be default. Everything should be 100% like the same. So if you go into the indicator, this also depends on your subscription to TradingView. I think that's how far back you can go. So if we look at the indicator, we can look at 30 days. So for the past 30 days, 85% win rate, almost 86. We've had a profit factor of 9.911. We had 14 trades. We made the indicator. If you would just follow the indicator straight out, you would have made about $3,300, and your max drawdown was about $300. So not really that bad. I think it lost one trade, and that could have been like a news day or something. I'm not 100%. So if you look, so like how it's enabled, let me just turn off the indicator. It will show, and it will show you exactly the trades that it took. So there's no trade there. And if we look, let me see, and it'll say, okay, entered here, then it exited here. Or I think entered here on this candle, and then it exited here, whatever the TP was. And then if you look, we can go to the 90 days. Okay, 90 days, 70% win rate, about $4,000. We had a little bit of rough start, and then, kind of just cruised up. Past year. Yes, I would say yes, you can, but I haven't actually tested it on that. I would have to run it through the back testing just to verify how it does. I'm going to start working on a London version of this. I tried to adjust the settings, but I will actually want to go in there and actually just make a London version and a gold version. So people that trade, I think those are the main things that people trade. As far as Forex, I haven't really dabbled with this in Forex. Could it be done? Yes. I would have to look into I just want to see like the stats just to make sure, it's working correctly with those, just because they are different as far as, getting filled. And because I know with Forex, you have different spreads. With us, we just, as soon as we enter, we're good to go. Like we get that price usually. So let me just double check just to make sure. I can message you and we can kind of give me some pairs, and then I can run some tests and then say, hey, like this is how it's doing. This is how it's doing over 30 days, 90 days, 60 days, a year. I can go back 5 years and give you the stats, and I can make some adjustments and say, hey, like these are the settings that I think are the best for Forex. And we can do something like that. But yeah, this is the year. This is the past year. it's 60%, 61% win rate. It didn't do super good on the profit factor, but it did make money. Max drawdown about $1,000, not too bad. Made 10,000 for the year. That's, I mean, like it's saying, I have a low risk because I use 50K accounts, so I'm not trying to blow up accounts. I'm just trying to keep them as long as I can, get those payouts. And then if we do the from 2020 to today, I'll show you what it looks like. So yeah, this is through like COVID and just all sorts of markets. So it's been able to survive that. I think 2023 was one of the worst years and we were still profitable. So that's a very good, it's very good. For a while, I could not get it to be positive. So yeah, almost 58%, almost 60% win rate. Max drawdown on 1,500. So if you were to blindly trade this over 5 years, you should not have blown an account. Also, this is not factoring in news days. So this is basically the worst you could possibly do with this indicator for 5 years. So this is just blindly taking trades. This is letting it go to basically, if it would ran to TP like by 10 points, and it has done that because I have the report of all the trades. There is trades that basically ran to TP and turned around and hit stop loss. So this is going to be the lowest it could be, the worst it could do. This is the worst. This is not like I said, it's not factoring in news days, like skipping news days, skipping bad setups. This is just blindly taking whatever the indicator says. And it does adjust. So if we look, depending on the setup itself, so like this was a setup, so it took 2 contracts. It just depends on the setup. It will actually adjust it in the backtesting data. And I have ran this this file. I've gotten it the file and ran it through like AI just to get like the stats and everything. Because I mean I can't go through 1,400 trades, but I was able to look like at the like excursion to see. Just to see like how big some of the losses were and like the points, just to make sure if I need to make any adjustments. And like, yeah, like I said, it's not moving to break even on any trade. This is just going full out win or loss. So yeah, like this is the worst this indicator, or what these stats are pretty much the worst it can do. This is just blindly doing that. An actual trader could do a lot better. It's probably going to be a little bit higher than 58. It'd probably be like 60, like over 60%. If you take out like news days and you know, if you were to adjust your TP, or for like, you know, you went a couple points away from TP and you went to break even, or if you were to taken the win, you would have done a lot better. Yeah, I mean, like I said, this is the basically like the low end of what it's showing. It's a lot higher. Like I like to go with 60% because it's good enough to be like a good enough system, but I also like to lowball it. I'd rather be on the worst side, knowing that okay, yeah, it could do better than this. But yeah, it's decent for what it is. I'm still trying to improve it, but it's doing a lot better as I improve. Like I said, I think this is 2023. This is out of the 5 years, this section was the absolute worst. I think it took, 7 losses in a row or something like that. I can't remember exactly. That was like the worst it did over the 5 years. So it does have a quick like turnaround. So basically, if you're in the hole, like if you're in drawdown, it does have a good turnaround, so you can get out of it. But otherwise, it has done really, really well. Yeah, it hasn't taken many losses in a row. But yeah, 2023, I could not get it to, no matter what I did, it just struggled. It was just the market. I really, you know, there's nothing I can do about that. It's just, you know, the market or the indicator is just looking for these factors. If it meets the criteria, it says, okay, yeah, I think this is going to happen. But the the biggest thing, the biggest reason why the drawdown is so low, or it is that, is because of the grading system. I did it straight out, just taking one contract, no matter what. Like, it just took one. It did okay, but then when I added in the it was using the indicator, but it didn't know to adjust for grading. And then so I just basically had it running just one contract, just straight up one contract. Then when I updated the backtesting strategy code to adjust for, if it's A setup, it'll know to use two contracts or whatever the amount to match the risk profile. It completely changed it. The drawdown, I think the drawdown was like $3,000 to $4,000 over the 5 years. And then once it went to knowing to lower the grades for certain setups, it almost cut it in half. And then with that, it just proved that the A setups and B setups were actually being graded correctly, and then the C setups were also, they were being graded correctly, but they weren't bleeding. I wasn't bleeding from those losses. Those are a lot smaller. And then the A and B were the ones that are actually making up the most of the the income, or for the P&L system. But yeah, and this is almost this is over 1,400 trades for M&Q over 5 years, and it's been able to survive. And like I said, I've ran this backtest I don't know, probably hundreds of times already to get it to here, and I can get this. That's the thing. This is the most balanced version. I can get the P&L super high, but the win rate's gonna suffer, and then the profit factor, I can get that. I can do one, and the other one gets hurt. So I can get this. I can get the max drawdown low, but it's gonna hurt the P&L. Or I can get the P&L super high, but the drawdown's gonna be $6,000, because we're gonna take a lot more trades more aggressively. But this is the most balanced version I've gotten of the indicator, where it's everything's kind of just solid. That was the other thing. I can tune it for 2025. I could have 2025 was the best for the indicator, was the best year. It was the most profitable year for it. And then 2026 is cruising to be a good year, as long as it kind of stays how it is. It's probably gonna outdo 2025. I could tune the indicator for now and make it super good now, but it will just tank everything else and not be sustainable. It's gonna blow account after account, and I wanted to make sure this is sustainable. So, but yeah, this is the backtest. So you guys have this. Like I said, I don't know. It depends on your subscription of how far back you can go, but you definitely can use it. And then if you adjust any settings in here, if you adjust it looks basically exactly the same as the indicator itself. It just doesn't have like all the others, like the TP stuff, because it doesn't need it. But if you adjust anything in here, it will adjust the backtest. So if you were to like change this to 4 hours and you update it, it will update this. So whatever settings, if you want to change settings, you do in the backtester, you can kind of see what it does, and then you can change it into the actual indicator, and then it'll mirror it. Another way you could go, I've done this before. It's not super accurate. It's accurate enough, but it's a lot more work. Is what you can do is also, like I said, it depends on your so you can see how the win rate changed. The the P&L, it changed it. But so if we look here and just turn on the indicator, what I used to do before I had the backtester, what I would do was just turn on the win rate and just do like a rolling, like I would go 2 to 11th, and I would go to the 11th, I would be like, okay, we made $3,000, and he had like, I'll just look at all these stats, and then what I would do is just go back to this date. So it'd go back to the 11th, or like about the 11th, because it doesn't always like roll like the right way, like exactly on the right date. I mean, okay, we had a 60% win rate. This is how much we made there, and then I would just keep doing this over and over and over and over. So I would just do like before, I think, because with the like non-premium, I think you can do 60 days. So I would just do 60 days at a time. So it'd be like, 2 months at a time, and then just calculate what the win rate was like that. It's more of a pain in the butt. It's easier doing with a backtester because everything's the same as the indicator. So you can just look at it as a whole and everything's calculated for you. But that's one way you could do it. But this way is just a lot easier. But yeah, do you guys have any questions or anything? We can wrap this up. Okay, yeah. If you guys have any questions or anything in the future, you can let me know, and then yeah, I'll be happy to answer. And yeah, we can wrap this up, and I'll see you guys later.